Hey guys, I'm excited to have an expert with us today. In this quick video, we are going to share with you about the mortgage industry and specifically what's happening right now. So this is Todd McDonald. I'm happy to have you with us, and you're with Guaranteed Rate Affinity. So tell us a little bit what's going on the market right now.
Well, Sonny, thanks for having me on your broadcast, and I really appreciate it. I know you're an expert realtor and have a great client base, and so I'm honored to be on. And I will tell you that it's just a volatile and kind of a seesaw or roller coaster market. Rates are up and down, and part of that is because of the uncertainty with unemployment and the virus and mortgage-backed security investors who buy loans. And so what's happening is investors are pulling out of the market, and then the Fed is dumping money into the market to try to shore it up. And so it's just a lot of uncertainty right now. We're still doing loans. Guaranteed Rate Affinity is a top 5 national mortgage lender, and so we're still doing loans. But with uncertainty comes what I call extra precautions that you have to add to certain loans. So we're still doing loans though.
That's great. That's great. Well, what is, as far as the rates, everybody's talking, the rates were at their lowest. So what would we say as far as rates right now?
Wow. I tell my clients every day that if I could tell you exactly what rates will be tomorrow, I'd sell everything and move to Vegas because they're really that uncertain. I've had VA 30-day, 30-year mortgages that I've locked at 2.75 with folks with good credit. And then 2 or 3 days later, they'd be at 3.25. And then, a week later, back at 2.75. Conventional rates have been bouncing up and forth between the low 3s and the low 4s. And part of that really is because of the fear or the uncertainty for investors who buy these mortgage-backed securities. Because if they buy this bundle of mortgages and all of a sudden people start going into default or forbearance, then they're stuck with these securities that are not paying out. And so they're pulling their money out of that. So here's what's happening in a nutshell. The Federal Reserve is trying to shore that up by pumping billions of dollars into the market for those mortgage-backed securities, which is making investors feel a little bit better. But as that pool of money is bought up, then investors pull back again. So it really is a daily roller coaster of what rates are doing. And so for me and my clients, it's a matter of trying to time it right and telling folks, hey, I can't be 100% sure that the rate you get right now will be the same rate tomorrow or even this afternoon.
Okay. Well, thank you so much. I think this is great for now. I have really appreciated your updates. I've been watching them faithfully. So I hope to be back with you soon again.
Please do. Let's talk again soon.